Hey everyone, welcome back to Drawbridge Finance. My name's Levi Woods and I'm not a financial advisor, but I am a long-time investor and I built this channel to help people with their investments. Today I wanted to talk about the difference between self-directed investing and going to see a broker, broker at a brokerage firm. And yesterday I stopped on the way home from work and I stopped at the grocery store to grab some groceries. Huge lineup at the till. So I decided I would just go over to the self-serve checkout, which I use pretty frequently. I knew what I was looking up and it wasn't difficult to look up. Actually doing it takes time. I would like to compare the self-checkout at a grocery store to low-fee brokerages, and they allow you to trade, but you have to provide the information. You have to provide the time and the knowledge required to actually buy the stock. Now, if you go through the till, you just put your green pepper down, you don't think about it, the cashier brings it through and takes your money. It's really, really simple. And that's what we're paying for when we go to a brokerage like Odlum Brown and we sit down with an advisor. They know that information. They have it in their mind. So it's easy for them to just say, oh yeah, you want to buy that, or this is what I'm recommending. And that's what you're paying for. So a slightly different comparison, obviously, because at a grocery store, you don't get any benefit for going through the self-checkout. In my case, yesterday, I think it actually took me longer to do it, which I think is why I'm comparing it to self-directed investing. Because if I do it at home, I can do it, I can look everything up, I can figure out what stocks I need to buy, really, really easy, but it takes my time. So when I'm talking about trading and I'm talking to new investors and they want to know how to get into it, you have to consider that as part of your trading strategy. Paying for that broker's time, if you sit down with them and you spend $100 or you make a phone call and you spend $100 purchasing one item, and that's their fee that they take one time, because we're talking about flat fee brokers here, not mutual funds. This is flat fee equity trading. So you phone the broker, they suggest a couple of things, you choose one of them and you pay that one time for that service. But you didn't have to do any of the research. They spend their day doing the research and then they're able to just give you that information the second that you phone. And every time you phone them, they're going to have different ideas because every day is different. You can't just decide, I'm going to buy this today and then 2 weeks from now expect that you're going to be able to get it for the same price, because that's not how the market works. Things go up and down and you need to time it right so that you're buying the right product at the right time. And that's what we pay our brokers for. Anyways, that's today's analogy. Hope that helps make a little bit of sense. Maybe it doesn't make any sense at all. But if you guys have any questions about anything financial, specifically on dividend investing or option trading and how I do that, leave a comment below. Let's get rich together. See you soon.